Well, every LP has a different objective they're trying to drive for. So challenges are going to vary based on the LP group. But generally speaking, alternatives we try to be as transparent as we can. I think transparency used to be an issue. I think that's less and less of an issue now. Clearly, liquidity is something that you're giving up, generally speaking, in private markets and in alternatives. Although now there's more liquidity features with things like secondaries or open-ended funds, so I think that's being addressed.
Almost everyone, whether you're on the pension side or the endowment side, you're asking the question of, if I'm going to allocate another dollar, where do I put it? And so measuring alpha and beta in every asset class, whether it's in the public side or even more importantly now on alternative side, given the fees that are on alternative investments, is going to become more important.
The two things that come to mind, first is access. So how do you make sure that you're accessing the parts of alternative investments that make sense to be in? And then the second piece is really the liquidity piece. How much liquidity does the portfolio need, and how much of that budget can you spend on illiquid investments?
Most of these are capacity constrained vehicles. Either it's a private equity fund where they have a series and you have to do fund 1, 2, 3, 4, and 5. And so at any one point in time, you might have 4 or 5 investments with the same manager, which each one of those has another annual report to go through. There's all kinds of monitoring that has to go on for each of these managers. And so we have over 400 relationships that we have to keep track of. So just the complexity expands tremendously.
As alternatives really go from a satellite exposure to core, there's a number of challenges that investors will have to face. One is really understanding the exposures that they have. We partner with clients quite a bit to look at their portfolios and help them think about, well, what do I own and what are the exposures? And I think more and more investors will need to be able to do that for their end clients.
Without a doubt, alternative investments have been growing as a share of most institutional portfolios. If you look at the people that were early in this movement, the endowments, many of them are up in 60, 70, 80% alternative investments. But there's been a big move towards alternatives for maybe larger, more traditionally conservative types of investors. So pension funds, sovereign wealth funds, family offices. So really the big challenge for these folks is how do you get into the assets that you want to be in? We know in some places like venture capital, there's a fairly small supply of very high quality investment opportunities. If you start looking at buyout funds and real estate funds, valuations look quite high. It's a very hot fundraising environment. So I think the biggest challenges are coming from people who want to increase their allocation to alternatives and thinking about how do they do this in a market that's quite hot and where they could potentially be overpaying.